Welcome to my new video. Today, we're going to discuss something that every entrepreneur and taxpayer should know: the Interim Budget 2024 and how it affects startups in India. With the theme of Viksit Bharat Budget 2024, our Finance Minister, Nirmala Sitharaman, has outlined key priorities focusing on the poor, women, youth, and farmers. Even though it's an interim budget due to upcoming elections, there are still important schemes and tax updates that can benefit you. So, let's break it down in a simple and clear way. Budget Day is an eagerly anticipated event in India, with both businesses and the general public waiting with bated breath to understand the schemes and initiatives that could potentially benefit them. This year, in light of the upcoming elections, Budget 2024 has been substituted with an interim budget. Nevertheless, the Honorable Finance Minister, Nirmala Sitharaman, has not failed to deliver on schemes and benefits, much to the satisfaction of the general public. The Finance Minister announced on the 1st February 2024 that the theme for this year's budget would be Viksit Bharat Budget 2024. She reiterated that the country continues to strive towards Atmanirbhar Bharat. At the same time, the welfare and aspirations of the Garib poor, Mahila, women, Yuva, youth, and Annadata, farmers, would be the most important focus areas in the Interim Budget 2024. A move away from agriculture to manufacturing and an increase in demand for the Food for Work program show changes in the economy. Decoding taxation, direct taxes. No changes have been proposed to the existing rates of direct taxes. The existing rates of income tax have been retained. To provide continuity, some tax benefits and exemptions have been extended by 1 year until 31st March 2025. These include tax benefits for startups. Let us explore the relevant takeaways for startups in this interim budget. 1 trillion funds. This fund will be created to provide support startups with 50 years low or nil interest loans to fuel their growth and innovation in emerging sectors. Aim is to boost research and innovation in high-tech manufacturing, such as semiconductors, electronics, drones, medtech, space, renewable energy, green power generation. II. The fund will provide much-needed support to private enterprises in these sectors. The fund will reduce dependence of the nascent startups on equity funding. In the absence of any long-term fund support, the entrepreneurs are forced to dilute significant shareholding at low value. The tax breaks for startups for any 3 years out of 10 years for incorporation was expiring on 31st March 2024. This is being extended till 31st March 2025. Any startups incorporated till 31st March 2025 can avail the benefits. However, the turnover limit of Rs 100 crore will continue. Tax exemptions on certain income for International Financial Services Centers, IFSCs. Tax exemptions on investments made by sovereign wealth funds and pension funds. The Interim Budget 2024 maintains the status quo on tax rates and extends certain tax breaks by a year to provide stability and continuity in taxation. No new changes or reforms have been introduced to the tax structure or rates. For more detailed information, visit the official website of VMK Professionals, wmprop.com, and always review the latest amendments before execution, as laws keep changing frequently. Withdrawal of outstanding direct tax demands. The FM has announced to withdraw the outstanding demands of income tax. Here is a summary of the key points regarding the withdrawal of outstanding direct tax demands announced in the Interim Budget 2024. In line with the government's vision to improve ease of living and doing business, outstanding petty direct tax demands up to Rs 25,000 dating back to 1962 will be withdrawn for the period up to FY 2009-10. Similarly, outstanding demands up to 10,000 will be withdrawn for the FY 2010-11 to 2014-15. These are non-verified, non-reconciled, or disputed demands that continue to remain on the books, causing anxiety for taxpayers. IV. Withdrawing these demands will help provide relief to honest taxpayers and enable refunds for subsequent years. V. This is expected to benefit about 1 crore taxpayers who have such outstanding demands. 5. The move aims to improve taxpayer services and reduce harassment of taxpayers over small disputed sums dating back decades. In short, the Interim Budget 2024 has announced the withdrawal of old petty direct tax demands up to $25,000 till FY 2009 to 10, and Rs 10,000 between FY 2010 to 11 to 2014-15 to provide relief to taxpayers. Assessment of income tax rates for the fiscal year 2024-25. Income tax rates applicable to individual for FY 2024-25, AY 2025 to 26. Individuals and HUFs can opt for the old tax regime or the new tax regime with lower rate of taxation, US 115, BAC of the Income Tax Act. The taxpayer opting for concessional rates in the new tax regime will not be allowed certain exemptions and deductions like ADC, ADD, ADTTB, HRA, available in the old tax regime. However, the deductions under Section 80CCD2, 80CCH2, and 80JJAA shall be available in the new tax regime. Income tax rates for individuals, FY 2024-25, AY 2025-26. Let's go over the income tax slabs for individuals under both the old regime and the new regime under Section 105BA, based on age categories. Individuals below 60 years, resident or non-resident. Old regime, income up to 2.5 lakhs, no tax. 2.5 lakhs to 5 lakhs, 5% on income above 2.5 lakhs, 5 lakhs to 10 lakhs. 12,500 plus 20% on income above 5 lakhs. Above 10 lakhs, 1,000, 12,500 plus 30% on income above 10 lakhs. New regime, Section 150 BAC, income up to 2.5 lakhs. 5 lakhs to 5 lakhs, 5% on income above 2.5 lakhs. 5 lakhs to 7.5 lakhs, 12,500 plus 10% on income above 5 lakhs. 7.5 lakhs to 10 lakhs, 37,500 plus 15% on income above 7.5 lakhs. 10 lakhs to 12.5 lakhs, 75,000 plus 20% on income above 10 lakhs. 12.5 lakhs to 15 lakhs, 125,000 plus 25% on income above 12.5 lakhs. Above 15 lakhs, 1,087,500 plus 30% on income above 15 lakhs. 2. Individuals aged between 60 and 80 years, senior citizens. Old regime, income up to 3 lakhs. No tax, 3 lakhs to 5 lakhs, 5% on income above 3 lakhs. 5 lakhs to 10 lakhs, 10,000 plus 20% on income above 5 lakhs. Above 10 lakhs, 10,000 plus 30% on income above 10 lakhs. New regime, same slabs as applicable for individuals below 60 years. 2.5 lakhs, no tax. 2.5 to 5 lakhs, 5%. 5 to 7.5 lakhs, 12,500 plus 10%, 7.5 to 10 lakhs. 37,500 plus 15%, 10 to 12.5 lakhs, 75,000 plus 20%, 12.5 to now up to 15 lakhs, 125,000, 25%. Above law 15 lakhs, 1,087,500 plus 30%. 3. Individuals above 80 years, super senior citizens. Old regime, income up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20% on income above 5 lakhs. Above 10 lakhs, 1,000 plus 30% on income above 10 lakhs. New regime. Again, same as for individuals below 60, up to 2.5 lakhs, no tax. 2.5 to 5 lakhs, 5%. 5 to 7.5 lakhs, 12,500 plus 10%. 7.5 to 10 lakhs, 37,500 plus 15%. 10 to 12.5 lakhs, 75,000 plus 20%. 12.5 to 15 lakhs, 125,000 plus 25%. Above 15 lakhs, 187,500 plus 30%. Surcharge on high income. If your total income exceeds a certain threshold, a surcharge is added to your tax amount. Income above 50 lakhs up to 1 crore, 10%. 1 crore to 2 crores, 15%. So 2 crores to 5 crores, 25%. Above 5 crores, 37%. education cess. An additional 4% cess is levied on the total of income tax plus surcharge, if applicable. Health and education cess at 4% shall also be paid on the amount of income tax plus surcharge, if any. Income tax rates applicable to company for FY 24-25, AY 2025-26. Domestic company normal income tax rates applicable in case of domestic companies are as follows. Turnover criteria. Tax rate. Where its total turnover or gross receipt during the previous year, 2021-22, does not exceed Rs 400 crore, 25% any other domestic company, 30 cent. Surcharge. The amount of income tax shall be increased by a surcharge at the specified rate percentage of such tax. For more detailed information, visit the official website of VMK Professionals, www.vmkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. Range of income surcharge rate, Rs 1 crore to Rs 10 crore, 7% above Rs 10 crore, 12%. The surcharge shall be subject to marginal relief. Health and education cess at 4% shall also be paid on the amount of income tax plus surcharge, if any. Special tax rates applicable to a domestic company. The special income tax rates applicable in case of domestic companies are as follows. Domestic company tax rate, where it opted for Section 150BA 25%, where it opted for Section 150BA 22%, where it opted for Section 150AB 15%. Section 150BA, tax on income of certain domestic companies. Section 150BA of income tax applies to the company that has been set up and registered on or after the first day of March 2016, and the company is not engaged in any business other than the business of manufacture or production of any article or thing, and research in relation to or distribution of such article or thing manufactured or produced by it. Once the option has been exercised for any previous year, it cannot be subsequently withdrawn for the same or any other previous year. For more details, refer the link in/incometaxindia.gov.in//2060/1-2-1-by-5883.html. Section 115BAA. Section 115BA provides that where a company wishes to avail the benefit of reduced rate of tax, the following set of deductions shall not be allowed to be reduced from its total income for the purposes of calculating tax at such reduced rates. Section 10AA. Provision in respect of newly established units in special economic zones. Section 32(1), IIA, additional depreciation. Section 32AD, investment-linked deductions. Section 33AB, tea development account, coffee development account, and rubber development account. Section 33ABA, site restoration fund. Section 35, expenditure on scientific research. Section 35AD, deduction in respect of expenditure on specified business. Section 35CCC, expenditure on agricultural extension project. Section 35CCD, expenditure on skill development project in Chapter CA. Section 1150BAB. It applies to companies that has been set up and registered on or after the 01/10/2019 and has commenced manufacturing, production of an article on or before the 31/03/2023. Last date of commencement has been increased to 31/03/2024 in this Finance Act. It should not be formed by splitting up or the reconstruction of existing business. Plant and machinery should be new. Opting to the Section 1150BAB, company can't claim some benefit of deduction. Foreign company, nature of income. Tax rate, royalty received from government or an Indian concern in pursuance of an agreement made with the Indian concern after March 31st, 1961, but before April 1st, 1976. Or fees for rendering technical services in pursuance of an agreement made after February 29, 1964, but before April 1st, 1976, and where such agreement has, in either case, been approved by the central government. Any other income, 40%, surcharge. The amount of income tax shall be increased by a surcharge at the specified rate percentage of such tax. Range of income, Rs 1 crore to Rs 10 crore, above Rs 10 crore, surcharge rate 2%, 5%. However, the surcharge shall be subject to marginal relief. Health and education cess. The amount of income tax and the applicable surcharge shall be further increased by health and education cess, calculated at the rate of 4% of such income tax and surcharge. And that's it for this video. We hope you learned something new and valuable about the Budget 2024 and what it means for startups like yours. Don't forget to share your thoughts and experiences in the comments below. We love hearing from you. And of course, if you found this video helpful, give it a thumbs up, subscribe to our channel, and hit the bell icon so you never miss an update on business, finance, and startup news. See you in the next one.